Are you searching for an income and growth ETF? Well, I found a total return of 30%. And the question is this fund really real? And we're going to share the data today with you. Welcome back to the channel. I'm Doug, the retirement guy, and that's right. I was searching and just searching different ETFs, trying to find things to help rebalance my portfolio. And when I came across this one, I was really, I'll say, shocked when I found an income and a growth ETF that gave me a total return of over 30%. So I want to give you and share with you the full details of what I was able to find. But first, notice to all viewers, past performance does not guarantee future results, and this information provided in this video is for educational and informational purposes only. It should not be considered financial advice. If you need financial advice, always contact a financial advisor or a professional. I am not a professional advisor. So the details of this fund, it launched in December 2nd of 2024. It seeks an annual income level of 12% distribution and paid out monthly. It's an actively managed fund. Unlike passive index ETFs, this fund has an active manager that selects semiconductor stocks and implements option strategies. This thing has that semiconductor focus, which fits very well in today's market. It gives you the semiconductors that are related to both income and capital appreciation because it's being used in AI, it's being used in computers, and is in many, many applications. Now, while this ETF tracks an index, the fund is actively managed and allows for strategic selection of semiconductor stocks and implements option strategies to generate that income. So let's talk a little bit about that investment strategy that we just said. They use a dual component approach, which combines equity exposure with option income generation. So the equity exposure, the diversified portfolio of 15 to 30 different semiconductor companies. It established leaders in the technology and innovation, and it focuses on companies in the forefront of the semiconductor advancement. Basically, you're looking at NVIDIA, you're looking at Taiwan Semiconductors, you're looking at Broadcom, you're looking at microtechnology. And then number two, they use a covered call and options overlay. It sells call options on some or all of the holding stocks, generates premiums and distributions to shareholders, and it targets that 12% annual income, but with no guarantee. So remember, it's targets, it's a management side of things. They're not guaranteeing that. So the combination of direct stock exposure plus option creations, a hybrid income-oriented profile. So the strategy, the dual approach, creates a hybrid profile designed to offer both growth potential and some equity appreciation and monthly cash flow through an options traded income. So looking at the portfolio holdings, and you look at this, you got NVIDIA at over 16.87%. You got the Taiwan Semiconductor at 11.97%. So over 28% of the portfolio is in the first two funds. So it's a concentrated portfolio with only 15 to 30 semiconductor companies. Now, this does create a sector concentration risk, but you also get a nice growth exposure that provides exposure to that technology of that semiconductor industry. And volatility risk, it's subject to semiconductors, industrial cycles, and market evaluations. Now, the distribution profile, this is where I got somewhat interested into, is it does pay out monthly payments. And it's at consistently monthly distributions potential, targeting that 12% annual yield. The distribution compensation may include ordinary dividends, capital gains, and return of capital. Now, the return of capital, as we always know, is good or bad. It reduces the NAV and specific tax implications for investors. Now, I'm not a tax professional, so always contact a tax professional for that information. but the yield is variable. When we look at the dividend history, you can see that pretty much everything has been ordinary dividends. The ones that are basically in the orange are return of capital. So they've only had really 2 big months that were 100% return of capital. Now, I'm not saying that they haven't used it in other parts of it, but majority of the funds have come in at ordinary dividends. And you can see we're seeing anything from a 43-cent all the way up to a 62-cent per month payout in 2025. When you look at the metrics of it, assets under management, $15.92 million under assets. Expense ratio a little high at 1.06%. The shares out, 275,000 shares, which is probably why it didn't come on the radar very quick, because it is a smaller fund for being over a year old. Now, as I said, this pays out at monthly frequency of monthly, volume of 1,900 shares. So it's kind of one of these sliding under the market. The yield so far is 10.51%. Now, the market performance, the latest history, this thing launched in December 2nd, so we do have a limited performance data availability. The wide trading range reflects on the semiconductor volatility. And it does have the capped upside, but even with the capped upside, we show that this thing had a growth of 19.84%. Even with the April tariff drop-off and the market adjustment of November, we still have a positive 19.84% with just the information that we've been able to pull together. So giving you a more dialed in approach, an active monthly income, which gave 10.51% annual distribution rate. So it's a little bit lower than their targeted 12, but they got 10.51% with a growth factor of 19.84% because of the exposure of the semiconductor industry and the appreciation of those assets. The total return came in at 30.35%. So what is this fund? Well, it's a YieldMax Targeted 12 Semiconductor Option Income ETF, SOXY. Now, I was shocked that it came in from YieldMax. I've always heard, that YieldMax has got a bad, put the money in and you never see it back. But they do have some quality funds, and this is definitely one of them. When I looked at the performance over date, 1 month, it's up 5.41%. Year to date, up 34.92%. 1 year, 35.35%. And since inception, 32%. And this is your growth plus your dividend combined together. So the key risks and trade-offs of this fund, it does have that capped upside, which will limit how much of the growth. So if it didn't have that capped upside, what would happen? How much higher this thing would have went? It's a sector concentration. It's heavy into semiconductors. It does use that return of capital primarily for tax purposes, but you always have to keep an eye on that, which could actually reduce the NAV. Now, liquidity. My concerns was that the thing is under $20 million in assets, which is always a question to me is, where are we at with that liquidity? And income, not guaranteed. It's a 12% targeted. They didn't hit their target, but again, none of this is a guaranteed option. But they did get us to that 10%. So the investor suitability, my thoughts on this one is this. It is an income-focused fund. It is a sector exposure that is dialed into just the semiconductors. And understanding the options is a must. Now, some things here is it's not really designed for growth, but it's had that decent growth over that 19%. It is a concentrated risk because it is all semiconductors. And it's a passive strategy that is really preferred. So in my opinion, I like the fund. I'm putting this into maybe balancing some of my funds into it. Let me know what you think. Is this something that, even though it's a YieldMax, is it something that you're in the semiconductors? is it possible that this could be a nice piece to add into your weekly or monthly portfolio? Let me know in the comments below. I'd love to hear from you.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join our Patreon to support the channel. I'm Doug, the Retirement Guy.